welcome to TheoTrade. This is Don Kaufman. February 2nd, 2022. We are just minutes after the cash close. I'm going to cut to the chase. Facebook earnings just came out moments ago. Underlying is being absolutely decimated right now in after hours trade. The Nasdaq, which was up literally 100 handles into today's close, ultimately getting smashed right now back into, well, the lows ultimately of the session. We cracked back under the 15,000 level, and we are still seeing some sell side activity. Let's go back to Facebook for just a second, and then we'll get, of course, to the crux of this evening's video. Facebook ultimately closing in and around the 323 level, effectively now trading the 260 level. I don't care who you are, that has got to hurt. One of the things that I want to gauge right off the bat here is like, how many standard deviations are we really looking at in terms of a move? Facebook was expecting, and again, I love to look at this and put maybe a little statistics, some value to it, but Facebook was expected to move, let's call it plus or minus approximately $25. Actual move at this point, let's just round it and say, it's not too crazy, but we haven't heard the conference call, anything of the kind yet. Again, we're trading like 265. So let's say we're between, 2.5 standard deviations right now, which is something, well, we've seen quite a bit of lately. I mean, if you take a look, for instance, at Google, all right, had the opposing move ultimately to the upside. Then, of course, you could look at something like Netflix, which was approximately a 3 standard deviation to the downside, recouped a little bit. But right now, as I'm talking about 2 or 3 standard deviations outside of it, I'll be very frank with you. Until that conference call is out, this could get a lot worse. It could get a little bit better. We could laugh, we could cry. The only thing you have to understand is it is just ripping apart, though, the Nasdaq. The impact of the Nasdaq, really, okay, this one, behold, I mean, it is the Nasdaq. It's a complete and utter reversal, not only, again, in the Nasdaq, but take a look even at the S&P futures. What a difference a few seconds can make inside of a marketplace. Nevertheless, I want to get down to business with this evening's video. And this evening's video is really regarding a little bit of crypto and what I think is about to be the impact to the SP 500. Now, I am not going to sit here and, proclaim that crypto is going to take down the S&Ps. No, not at all. But the crypto market, and specifically we're going to look at Bitcoin here in a moment, provides a really ominous outlook for the S&P 500. Maybe we're seeing that ominous outlook effectively play out right now. So allow me to explain in a little bit of detail here. So let's push aside whatever we might think about markets, okay? I mean, what do we think? Right now, nothing. What do we know? We know that we had an absolutely rip your face off rally. I mean, this is, and again, I don't want to sound incredibly bearish. No, not yet. I'll get bearish in a moment. But this has been just the quintessential, okay, if you would, almost like bear market rally. And people look at this, it's a buy the dip, okay? Or it's the bear market rally, and we're about to get absolutely slammed, possibly testing into this, 40-11. But push that aside for a second. Again, what do we know? We know that we've rallied back up substantially. And anytime I see this kind of like, again, we called it in trading, the rip your face off rally, I always think to myself, in the midst of the heaviest volatility, we often see some of the most violent moves back to the upside, okay, in markets. And most people are not familiar kind of conceptually with that. In fact, when I look at the SPX, so this is the SPX, you realize it's Wednesday afternoon, and we right now are outside the edge of the expected move. I mean, you gotta, you look at this in terms of overall volatility. Again, it's not what you think, it's what you know in here. You had about $137 expected move this week. I mean, last week we'd have an even bigger than that. We actually crossed outside of it. The week before that, we just got smashed to the downside, neither here nor there. So you have this $137 expected move. We're already outside of that. So it already reeks of volatility in the marketplace, okay? But when you see this immense move to the upside, I always think to myself, when it's following volatility, it's likely dealer negative gamma, okay, that's actually causing and then accentuating the move, not only to the downside, but to the upside. And a lot of people are not familiar with that terminology. When I say like dealer negative gamma, they're like, oh yeah, you want fries with that? It doesn't really kind of resonate with a lot of people when I talk about like dealer negative gamma, but the way that the market making industry works, and I like to explain the market making side of the business because in effect, first of all, I come from that background, but secondly, in the market making side of the business, the market makers don't take directional risk. They hedge everything, okay? They hedge everything. But when volatility is higher, and I think that the best way to explain this is when volatility is higher would be in the midst of sell side activity, right? So when the market goes down, vol goes up. And in heavier amounts of volatility, most of these market makers, okay, are more likely to be short options, okay? When they're short options, it means they're basically, okay, they're sellers. They're sellers. When you're seller of options, it actually makes you negative, all right? Gamma. Negative gamma implies that you have to hedge with the direction of the marketplace. And I'll give you a quick example. As the market starts to sell off and sell off precipitously, okay, the market making firms might turn around and do what? As we're selling off, okay, they may be selling puts. And if they're selling puts, it's actually producing positive delta. How do they offset positive delta? Okay, by actually selling S&P futures. So they're actually selling S&P futures to hedge the fact, okay, that they're selling puts. Why are they selling S&P futures? Because it produces negative delta. So this negative delta offsets the positive delta, and it's a lock. So how do they make money? Well, when they're actually selling S&P futures and selling puts, the delta risk, okay, the delta risk, they try to keep very, very mild, like zero. So how do they make money? They're actually selling, for example, like a 40% implied volatility. And you still get to keep a whole lot of juice, even though they're mitigating delta risk. They're not necessarily mitigating the volatility exposure in there. You're like, so how does that impact the marketplace? All right, the more premium that you sell, you then hedge with the dynamic in the marketplace, right? So what are they doing, again, when the market's selling off? Again, they're selling puts. Okay, when they're selling puts, what are they also having to do? All right, because selling puts implies positive delta. Then they're selling, all right, ES futures. The moment we have a little bit of a bounce, what do they have to do? Okay, got to turn around. You got to buy back your S&P futures, and it explodes the market right back up. Fire, boom, because what you get as soon as the market making firms start buying the S&P futures, then you get these people that think the dip is being bought, and what do? The dip does get bought, and we actually start to rally back a little bit. Okay, and it's actually one of the major impacts to a marketplace that's seeing a lot of dealer negative gamma, and that's probably the easiest way to explain it. So how does Bitcoin fit into this? Okay, what's interesting about Bitcoin is that Bitcoin, all right, is a product, but doesn't really have a substantial options marketplace. Now, this is where, of course, all the crypto people that come out of the woodwork and they're like, no, it's got options. Like, okay, so I'm showing you Bitcoin futures. Calm down, crypto people. I'm showing you Bitcoin futures, right? And I can open up these 23-day, futures, and I'll open up and I'll look at like volume and open interest. You see anything in here? Okay. The volume and open interest is absolutely negligible. There just isn't any volume and open interest. No matter what kind of, Bitcoin marketplace, the volume and open interest isn't there. So in effect, what you get in a Bitcoin marketplace is a lack of dealer negative gamma. You go, wait, what does that mean? It means that when you see sell side activity in a marketplace, without dealer negative gamma, you don't get the wicked rip your face off rally. Okay. What's so interesting about Bitcoin, it's been slipping, pausing, slipping, pausing, slipping, pausing, slipping and pausing. Okay. It's not having the strenuous and that volatility of the bounce back. I believe without dealer negative gamma, okay, that this product is in incredible trouble. I also believe, okay, that this reveals that the movement that we're presently seeing in the S&P 500 is expressly because of dealer negative gamma, and that the future of the S&P 500 is much more sell-side activity, that we're only ultimately in a bounce. In fact, to kind of further this a little bit, I'm actually going to bring up a chart. In that chart, a lot of people, they like to run comparison charts. By the way, whenever you run a comparison chart, you got to change the style from candle, cruise it over to like a line, put a line versus a line. And I thought that this was the best comparison chart. So I didn't use the S&P in here. I'm intentionally using the QQQ, okay, versus, all right, the BTC, which is the Bitcoin futures contract. All right, QQQ is the primary. This is the QQQ. See the wicked bounce? This right here is ultimately, okay, what? It's the Bitcoin futures. Now, when you're looking at the comparison chart, you're like, they don't look like they're mirrored. Listen, this is 3 months and they're both headed down. Like comparison charts aren't great because the comparison has to have like point A. It's not a great way. Like comparison charts are too much visual, right? I'm a much more quantitative individual. So I brought up a correlation. All right. So correlation coefficient. And this is just simply the QQQ versus the Bitcoin futures over the last 10 days. And I wanted you to see that the correlation coefficient was basically 1. Okay, when they're 1, what it basically means is they're moving in like perfect unison. They are in love with one another at that point. Except, of course, on this last bounce, where the correlation has actually dropped out. Oh, except on the previous bounce where the correlation dropped out. Okay, I believe what you're seeing in Bitcoin is much more pure, if you will. Bitcoin right now may be even more representative, okay, of asset classes than is the S&Ps. The S&P 500, the QQQ, they're being influenced dramatically these days by dealer gamma. Like everybody's trading options. We all know that. I mean, listen, okay, even on a slow day, yesterday we traded 36 million option contracts. Average, okay, in the first month of the year has been 44 million option contracts. You don't get that action in Bitcoin. So Bitcoin is pure. What's pure about it? It's just hideous. It's sell-side activity. And I believe that the high correlation speaks volumes specifically about Bitcoin versus the Nasdaq. I believe the Nasdaq right now, okay, is just marking time before it goes back into a fit of rage. And that fit of rage, it may have just begun. And again, this is, not planned after, Facebook coming out over here. Obviously, Facebook is just a, igniting, if you would, some of the volatility, but there's no question right now. NASDAQ is off 1% after ultimately being up to that's right, 15,260 level, people. This is an absolutely violent move. Speaking of Facebook once again. All right, now you can start calling it 3 deviation territory because it was looking for a $25 move. We're down almost $75 right now. It's one of the most hideous moves that we've actually seen in a mega market capitalization underlying. This is mega market cap. This ain't Netflix. Okay, Netflix is like a little flea in comparison to the Facebook. This is going to have residual impact to a ton of different products. Get ready for some volatility. And again, crypto just really, to me, providing a very ominous outlook for the entire S&P 500. Thanks everybody for joining us here at TheoTrade. Have a wonderful evening. Bye-bye.